Let's just talk about this IQ. This is something I've been trading for the last couple of days, so we'll start there. Start with a good trade that I've made. Can you show me like a monthly chart? So IQ is a recent IPO, the Chinese IPO. The IPO price was $18. A general principle for IPO trading is if the stock is holding above the IPO price, we want to be long. If the stock is holding below the IPO price, we want to be short. So this is a good area of trading. In fact, one of our traders, who is an experienced trader, who we hired recently, only trades secondaries and IPOs. And so they trade very well on a technical basis because they're so young. There's not a lot of difference of opinion when a company like this is so young, because everyone can sort of see the prices that are most significant, as opposed to, if you were trying to figure out how to trade Match.com, there would be an infinite amount of ways where we could find support and resistance depending on different styles of trading. And so, and they tend to be more momentum based. So I was trading this, and to me, if the stock ever got below 1740, it was going to be confirmation that it was clearly holding below. It was clearly holding below $18. So you can see right there, it finally was able to get below that 1740 level and hold below there. And I've started a swing position in that on Tuesday, and then added to it on Wednesday. And so my average price was actually around the 60s. Around when something gets below a level like that, I get interested. But my average price is in the high 50s, and I added a little bit more below 1740. And yesterday, if we can zoom into yesterday's action, if you just highlight that. Maybe change the time frame.
Do you know how to use this now? All right.
Just change the time frame. Let's see if that'll work. Okay. And so you can see yesterday, I walked in yesterday, and there was a small note that basically said there was a bunch of extra activity in puts at $15 for May 15th and for June, which was odd. I mean, we sort of walked in yesterday, and the stock was really like 1760 in the pre-market. There was just this little note that came in, and it opened up, and as you can see, it went from 1740, and it traded all the way down to $15, and really 85 cents was where it stopped going down. There's a lot of volume done there. Can you highlight the large red candle? See that large volume red candle? Can you see that's an example of a puking action? So a lot of times we talk about in trades to hold that we're looking for a reason to exit. We're in the swing. Let's look for a reason to exit. So one of the reasons to exit is a puking action. You see a movement away from price that's much larger than anywhere else. So in this case, you get a move from 1650 all the way down to 1585, which is a larger move away from price than we had seen at other times. So it's a larger distance. And then you get an increase in volume. That's a puking action. And so the way that I actually traded it is I scaled out of it, and I was on actually a phone call when it actually had that puking action. And I came back to my desk just at that time, and I had a trade decision as to whether or not to take off more of my short position. And so that's an example of how hawking an IPO and looking at prices that are significant can set up really good trades. So today it went up to 1670, and somebody bought it at 63 cents, wouldn't drop the bid. I was like, what the hell is this guy doing? Somebody bought it at 1670, wouldn't drop the bid. They finally dropped the bid, and I added to my short position again. So I took some off into the down move. I kept some. And then we went back up yesterday. I put some more back on, and then into the close, I just took off what I put on because I don't want to take the overnight risk as much as I did the intraday risk for that play, since it had kind of turned around a little bit. But it's still below 17, and it's still below the IPO price of 18. And 17 had been like a last technical level. So, you know, when it goes up to 1670, and I see a clear pattern of buying. Guy was buying at 63 cents, like wouldn't drop, like didn't drop a penny. Weird. Like, why don't you buy 62, 61, 60? Like, wouldn't drop at all. Like, was unable to think of another price in his head as to where to buy. And then goes up to 70 cents, like wouldn't drop, not one penny, not 69, 68, come back 69, 70, just 70, just only would buy it on the bid at 70, wouldn't drop the bid. He wouldn't do it, you know, completely stubborn, just couldn't think of another price. And then finally 70 dropped, and I got in it again. I put some more risk back on. I took off some risk at 50 cents. And then, because I wasn't sure it was going to really necessarily go down before it went back up to 65 cents. I was kind of looking for it to make a lower high to that 70-cent area to feel more comfortable about really shorting it against like the 70s again. But when it went down to 50 cents and then it started to go down again, see it goes to 50 cents. I was like, oh, it's going to go to 50 cents. And it's going to go back up, make a lower high potentially, or maybe even go higher up to 17. But I want to take some risk off at 50 cents. It didn't go up at all. In fact, it went down really nicely to 25 cents. And this is an example of like trading style to me. Like, I like to trade stocks on the short side that are going down. I like to look for stocks that are showing me they're below VWAP, that are showing me that they failed from congestion areas. I like the way it's slipping away from price. Like it goes to 50 cents and it's slipping away from price all the way down to 25 cents. And so I actually add, so you see how it goes back up to the 40s from 25? Like I'm up on the offers. I'm adding every, you know, little area that I'm adding 100 shares like every couple of cents. So I added some at 32 cents and 37 cents and 39 cents. I was up during this meeting, and I was up at 49 cents. I feel like, to me, I want to be in stocks that are going down. So I put more risk back on again. I'm up all the way into 50 cents right there. Now, I might be wrong, and I might this thing might turn around again, but like the momentum's down. This is a stock that's broken on a longer term charts, right? And it's acting intraday, weekly. How's the market doing overall? Oh, awesome. All right, how's the stock doing? Trading down again. So now there's people who trade differently. Some people like to short into the resistance. Some people like to short into the strength for stocks that are fundamentally unsustainable. Okay, so I think Cindy, you've done a lot of that in the past. There's no right or wrong way to do it. You have to pick your system. I'm just pointing out to you why I'm thinking of taking off risk and putting on risk. And so that, yeah.
I'm sorry, I have a question.
Yep.
I'm trying the past like week or so. I'm trying to do something similar. In the past, I only added risk when it actually retested a major resistance level, like VWAP most of the time is what I'm looking for.
Okay.
Now on a stock like this, when you said you add 100 shares on pretty much any, like the pops against those levels. How do you adjust your stop? That's something I'm really struggling with, because the average is, well, I'm not doing it correctly, obviously, but the average is changing in such a way that I am struggling with adjusting my stop and not getting stopped out.
So one thing, I'm pretty confident that this thing has got a lot of downside to it. So if I wasn't confident that this thing had a lot of downside to it, I wouldn't be in it.
Okay.
You know, the first area that I feel like I need to worry about anything is that 1585. The next level for that is like 1540, which is the absolute low in the stock. Below that, this thing could go to like 10, 12. I mean, not in one day, but and I'm not suggesting it will. It would. So I want to start off with saying I feel like I have a really good risk reward. And I want to say also that I feel like the stock is going to go down because I'm seeing the weakness. Now I might be wrong, and you can quibble with whether or not you think I really do see it. Like you could come back and say, well, the RBL's not so great, Mike, in the stock on a day like today, or I'd like to see it slide away from that 50 cents more. It's a little bit, it goes up a little bit too easily. You can counter those points. That's fine. But I think I'm seeing it. And so, you know, I feel, and the other thing is I don't know how much it's going to go up. Like if these things are really weak, sometimes they don't kind of go up. So I'm not willing to wait for it only to go back up to 50 or 60 cents. I'm not willing, I might miss it just really going down if I truly wait for it to go retest the level. I'm not telling you that's wrong, but to me, I want to scale into the level because I'm not really sure how much it's going to go up. You know, my ads, I'm going to end up taking off above 60 cents. I'm going to get flat above 72 cents and reevaluate at 17. So what I add, I do have a picture in my mind as to where the short-term momentum, so I'm probably going to take it off of 61 cents. And I could very well be wrong. So that's that. Let's take a look at SPY. This is a really simple long. I got long SPY in the open. First I got short, and I got long. So I've been noticing that the overall SPYs have offered a really good risk reward opportunity when we break the opening range. We break to one side of the opening range. And so you see that big red candle there, like right on the open? Yep. So, you know, to me, it broke to the bottom of that range. So I got short a little bit, and then I got stopped out above the whole number. It went all the way up above the whole number. So to me, we broke in the opening range. We got above that 262. I thought we broke to the downside. We didn't. We broke to the upside. But I also noticed when we broke to the upside that tick was really, really strong. I liked the internals getting better. So I used something that Nick Kuchikhan built, which is percentage of stocks above VWAP. And so the percentage of stocks above VWAP got healthier. Volatility was coming in, so that was particularly good. But I really like to, I try and watch tick. And I look for, if you watch tick a lot, you'll notice the days when the ticks are unusually strong or unusually not. And so, you know, when you tick above 800, those are really strong ticks that you'll notice. And so, you know, you get some of that. And people use different ticks, but I do use the thinkorswim tick. So we got that push. And so I ended up buying. So I was short, got stopped out. Now we're above the top of the range. So I'm going to short because I think the early moves are significant. I have to get long, don't I? So I ended up getting long, and I've been long the whole time. I sold half my position at 50 cents. I thought the market was getting a little bit weaker there. I was apparently not right. And the next level is 265.50. And so that's what I did. I'm just looking at the opening range, and I'm looking for a large push with a good tick and good internals that are getting better. And the way that this has been working, this trade, because the market overall has been directional. And then I think you have to sort of think about the fact that this is 2 times in a row now when we got below the 200-day moving average, where we had a really large bounce. And I'm not sure that this is the reason why, but you know, there are a lot of technical traders who are going to get short when you get below the 200-day moving average for the overall market, and you're going to get a lot of people sell. So it's a major technical indicator for people. Now we didn't close below the 200-day moving average, so there would have been even more people selling if we had closed below the 200-day moving average. This is twice now where we got below the 200-day moving average, and we've had a pretty big bounce. And my suspicion is that the people with the money, quantitative asset managers, aren't looking at the 200-day moving average. And there's just a lot of momentum hedge funds who are piling in on the short side and getting positioned the wrong way, and the asset managers who have a lot more money are taking the other sides of those trades and pushing it higher and making some of those short-term shorts cover. So I think that's why you're seeing these days be very directional on a day like today. So I had that back in my mind too, and sort of see what happens. I thought that was a pretty good opportunity. Okay. I had one more trade today, Match.com. I thought Match.com was going to turn around, and I actually took this out overnight. It ended not particularly well yesterday. But let's show, you see how the 3 o'clock move? So I like to look at these 3 o'clock moves as well. At 3 o'clock, what did it do? The initial part of the first 30 minutes, just breaking to new highs, right? Just breaking up to new highs. And the volume was okay there a little bit before 3:30. But you know, my thesis for when I was in this stock was, I think this can go back to 45. This was, you know, one of those stocks that got beat up pretty badly when Facebook announced that it was going to get into the dating app space. You know, Match also owns Tinder, so they have some really strong internet real estate in the dating space. And you know, my sense was this is really sold off too far. It has a wonderful looking chart before the breaking news that Facebook was entering the space. And, you know, my sense was people were going to come back in and really buy this up. It appears that, you know, so one of the things that I think I need to critique myself on is, we show that 3 o'clock hour again. You know, while it did definitely push to the upside and was showing the strength, it didn't close very well. And then in the 1:30 to 2 o'clock area, you know, what was the market doing at that point? The market was really pushing higher overall. Market had really bounced, and you would think if Match.com is holding up and the market was tanking, but then when the market turned around, if my thesis was going to be correct, that this could go pretty quickly back up to 40 and then maybe 45 over a medium term, it should have been really working. And what it should not have been doing is trading below VWAP and finding stops below VWAP. That's not a sign of a stock with a really big bid in it. If there was going to be a really big bid in it that was going to take this thing up to 40 and 45 because it was oversold on a breaking news play. You really shouldn't see that above below VWAP-ness. You should see a pretty clear staircase up chart pattern. It should go up and it should pull in a little bit. It should go up and make new highs. Pull in a little bit and go up and make new highs. You should see that type of chart pattern. And, you know, A, when I didn't see that, when the market got really strong, and B, when that first burst of 30 minutes in match got met with selling into the close, that's a strike. Now it did close above VWAP, so that was okay, but that's a strike. And then today it opened up and went back up towards highs yesterday, and I actually tried to take some off up at 74 cents. I actually was the high offer of the day. I was actually up at 79 on the lit market for 100 shares. I had a relatively healthy position. I was up for 100 shares just to sort of see if it would print. And it never got above there. It was going up. I stopped the stock from going up. And then I started on the dark pools trying to sell it at 74 cents and 73 cents. They printed all around me. I couldn't get one share. And then somebody whacked the bids all the way through to 59 cents. And so I couldn't even take off a little bit of risk up there. It wasn't strong up there in any way. And the market was strong, right? And I just wasn't getting that. And so it pulled back in to all the way back into 35.80, and I actually bid for some more, thinking, well, you know, if I'm going to hold the stock from 36.80 all the way back down to 35.80, which was kind of that consolidation level from yesterday, right? I have to buy some more, or else I shouldn't have held it all the way back down. So I bought some more. I bought 500 more shares. Thought I would very easily, and the market started going up even more, I thought very easily I would be able to sell this at 30 cents just to sort of make the spread from, you know, like 81 cents up to 30 cents and then, you know, keep my core position, but make some profit on my core position to take some of my risk off, which is something I like to do. And it just didn't go up. So I hit myself out below 50 cents. And, you know, my thesis has not been proven correct yet. Now, for a medium-term trader, it may be smart to be buying this down here at 35, thinking that this can go to 45. But I'm not a medium-term trader. I'm a short-term trader. And the price action for my thesis is just not working. It's not working. You know, do I think this can still go higher, 45 in the medium term? Yes, but that's not my job. If I want to like buy this in my personal account, okay, that's a different decision. So I have thought about doing it actually, but not for my intraday trading account or my short-term trading account. So it wasn't working, so I took it off and I'll sort of keep watching it. But my thesis was wrong for the short term.